Open the camera. What's up, everybody? Froggy Sonics here. Nothing I say is financial advice, entertainment purposes only. Not a financial advisor. What a week! What a week! Um, crazy action, crazy action on AMC. Using the Hoyles method, highest open interest on the lowest strike that has the most potential for market makers to make downside money on their puts and steal premiums out on retail calls. Came true again. We bought the dip like never before have I seen people buy a dip this hard. It was absolutely amazing. But in that too, there were still people in the community, especially on Twitter, that came in and said, yeah, man, I got into some calls, or some of the big influencers tweeting out, jumping into AMC calls again on Monday, Tuesday, Wednesday. And, do what you do. It's your own decision. I'm not telling you what to do with your money. If you want to lose it, lose it. That's fine. But it's like clockwork, man. Not only are we watching call options get rug pulled every week, which is happening again this week. Max Payne is $12. They on AMC, they manipulated the options chain so much this week that I couldn't even keep up with it on my method to plan the best dip buy. Luckily, we all see $10 was a key point. But the open interest on the calls and the puts shuffled so greatly between strike prices each day that it blew my mind how corrupt it actually is. And not only that, they didn't just reshuffle this week's call options and puts. June and July's have basically been erased. The open interest on these big options out in June and July have just disappeared, dried up. It's gone. I don't know what happened to it. Next week, May 20th, like we've been talking about the week of May 20th for a long time, there's still a lot going on. There's still a lot of open interest on the $20, $40, $60 calls out, way out of the money for next week. But the highest open interest on the lowest short that I see it most profitable for market makers next week is $20. Now, obviously, they're going to try to get the price as low as they can because a lot of them are short the stock. But when you're manipulating the options chain, one, you have to make money on your puts on the downside. That's one of the key points there. But two, you have to have enough retail money in on the call side to take those premiums. That's the real key. They're using this circular method of generating FTDs to knock the stock price down, creating pump and dump scenarios like we just saw where we ran 30% in a day and everybody goes, oh man, I'm buying in on the call options because this thing's going to go MOAS. Everybody jumped into calls. Now it's a day later, expiration day on Friday the 13th, and they're knocking it down below Max Payne again, below $12. Now again, this Hoyles method does not account for any whales jumping in or any insane market catalysts like another war starting or a meteor hitting there, stuff like that. But it's been pretty damn spot on predictable so far. It's influencers, there's a key thing about influencers that are paid. They become compromised in a way when they get paid for advertising certain platforms or certain cryptos or this or that they lose their original truthful message in the fact that the more they get paid for views and subs, the more they want those views and subs, right? So you lose your original truthful message in a manner that you're trying to give people what they want to hear and what's exciting instead of what the truth is and what's best for them. And it's not my decision to decide what's best for who or what or when or whatever. But when you're representing or you built your following off the back of the ape community and the ape nation, and the original community-wide accepted strategy was buy and hold, an unwritten rule strategy that's everybody's individual decision to do themselves, but it's like an unwritten code of the ape nation is buy and hold. We do it because it's smooth brain, it's simple, and it takes away any opportunity for hedge funds and market makers to act out any forms of corruption. We limit their potential to do bad things by just buying and holding. And that's another reason why we started talking direct registration more. I didn't really like direct registration 3 or 4 months ago. I didn't know enough about it. I had the bad misconceptions that people put in my mind about you're going to get stuck and you'll never be able to sell. Oh, Citadel owns Computershare. But dude, if we log anywhere near the float, say 500,000 retail apes, all log 100 shares, right? That's not the total float, but that's enough data to prove, say 2 million. 2 million apes log 100 shares each. That's enough data to prove terms of an average share count, an average share per person. If 500,000 apes ended up logging 300 million shares, then we would know the average share per person holding in retail is well over the $100 that Adam Aron said it was in the earnings call. And that's just the data he put out because that's what he's got. It's so simple. I don't recommend logging more than 20% of what you have. Stay flexible and stay on a platform that you can sell instantly and get, same day price action. But it doesn't hurt to register shares either, because you can buy and sell on Computershare. And no matter what, you have a 100% legally issued share that's logged on the book for AMC to see during meetings. Not only that too, but if you have multiple platforms, say Fidelity or E-Trade or Moomoo or whatever, say they just crash when this thing kicks off, like MOAS happens, everything's crazy. They just crash out because they're just overwhelmed or whatever, or it's a corruption, it's corruption or whatever. You can still go to Computershare and still have the availability to sell those shares when you need to. Multiple platforms gives you multiple options in case of any types of crash. But really all we need is 4 million apes, 4 million retail investors to log 100 shares. It's super, super simple. Anyways, things are looking really, really good. Highcroft's looking phenomenal. I know I ran in and bought the dip as much as I could around $1. I did the same thing with AMC around $10. I hope everybody else had an opportunity to do it, because what I see long term is us finally reversing out of this year-long descending wedge where we had the fake out breakout to 31, which everybody knew as soon as it halted, Citadel was up to something. But we're coming down to the base of this, and it's beautiful because it's lining up perfectly with my Hoyles method that I called out next week, where I think we're going to break out of this and they're going to make a $20 attempt, because they've put so much downward pressure on this stock in the last week in the form of failure to delivers and short interest, which you see is going through the roof. I'm really excited. I'm super pumped about it. I'm a little drained today because I've been at this all week, man. We've been going crazy all week. GMEs went nuts this week too. I really think it's time for us to make some moves here. And don't forget that we have so many catalysts going forward with AMC, popcorn in retail stores, credit cards, crypto, and there's supposed to be rumored 5 more acquisitions on the table for AMC. So who knows what those are? We could hear some insane news that blows this thing out of the water. Highcroft, Dr. Diane Garrett said we will be full-scale commercial operations by 2023, landing at the same time. And then in June, the freaking GME dividend stock split, man. Holy cow. That's such a good catalyst. Not to mention, Dr. Strange has crossed $507 billion globally in a matter of a week. That is massive. We're coming into the weekend. People are going to bombard the AMC movie theaters. Doctor Strange is going to make a run to $1 billion within the next 2 weeks. That is huge. Jurassic Park Dominion, Top Gun Maverick, Rise of Gru, Minions, Lightyear, Avatar 2, Thor Love and Thunder. It's crazy. There's a rumor out too that there is a Thor Love and Thunder Mjolnir hammer with a handle that you open and it's a popcorn bucket. So I'm excited to see if that's true. I will definitely be buying that. Anyways, guys, no options May, no options to November, hashtag it, Twitter, all that. Play what you want to play, do what you want to do. But I am bringing awareness to the corruption that is happening with the market makers price fixing the stock to steal retail premiums in the options chain as they're making money on the downside. And I'm trying to bring light to the issue of paid influencers on YouTube and Twitter who have been compromised in a form of advertisement revenue and like and follow and sub generation, which causes them to, in a way, produce content that might not actually be their true opinion. They have to produce content to keep their revenue flow coming in that people of a broad spectrum are going to like. Because a lot of the apes are catching on to the grift. A lot of apes see it. They're pulling back from YouTube. They're coming into Twitter. They're talking about real stuff on real issues, on AMC, GME topics, laser eyes, focused on the true play. Now, if you're making your money, man, make your money. Good for you on your YouTube. Good for you on your life success and everything. Like I said, this channel will always be free. I will never ask for subs, super chats, or any donations ever. So if you get a DM from anybody that looks like me, it's not me. I will not DM you asking for any type of monetary compensation. So on that, the tweet, almost forgot. People on StockTwits are now tweeting exactly what we've been saying for the past month. Here's what really happened. This is from David C. Wilson. Says he's a portfolio manager from Houston, Texas. This is on StockTwits. Here's what really happened yesterday. Ken needs liquidity. Much of that liquidity is now coming from the options chain, as well as from the trades themselves. How does he get that money? His machine learning algorithms detect that there's not enough money being made this week, so they release the stranglehold he has on certain stocks, allowing them to rise for a short time. His algorithms start buying the stock for a short time. During this time, some real shares change hands and a lot of fools run and buy call options. When enough money is made, the algorithms then crash the same stock and make more money on the way down. The calls naturally expire outside of the money. Gary Gensler and the SEC, of course, cannot see this. Bottom line, if you buy calls, you are keeping Ken in business. Thank you. David C. Wilson, thank you. I'm not on StockTwits. I'm going to see if you're on LinkedIn, man, because you said exactly what we've been saying. It's so predictable. And not only that, what he just said, but Citadel makes money off of this when you play the options chain because they pay the brokers for the order flow, which not only allows their algorithms to do this, but gives them a crystal ball on when to cover and reshort stocks, when to create FTDs and when not. They make money on that, you guys. PFOF is banned in Canada, Germany, the UK, and Australia for a reason. Bernie Madoff didn't go to jail until Ken Griffin decided he wanted to be the PFOF king. That's like an old, Gordon Gekko Wall Street story with the new Wall Street movie where the dude turned him in for all shit like this. I mean, you can't make this up. And now Citadel's popping up in the AMC Spaces calls. Citadel's tweeting about AMC theaters, which I hope Adam Aaron sends a cease and desist to Citadel to not use the AMC brand name associated with their company Twitter profile, their legitimate company Twitter profile, because I don't want the AMC brand name associated with Citadel whatsoever, because you got new apes coming in, they see the Citadel tweet, and they're like, oh man, Citadel's using AMC, and then all of a sudden you get crazy people coming in saying, Citadel went long. Look here, you can see it on Fintel. They're long on AMC. And then now we have this conspiracy theory that AMC is in bed with Citadel. I just don't like it. I hope he tackles that. Citadel, thank you for giving us your money for renting the theater. By the way, people found out that the picture you used with the empty theater and the Citadel Connect on screen was from 1998 through the metadata. Whoever's running your social media, I'm just going to say you're not very good at it. You literally fall into every trap of being a shill and a phony you can possibly make. And by the way, again, to the person running Citadel's Twitter account, you are going to get thrown under the bus like nobody's business once this thing blows up. So I hope you have an exit strategy. These paid social media experts that these big companies and politicians use, man, y'all be careful. You're the first person that's going to get thrown under the bus. Anyways, I'm sticking to what I was saying. No options may, using my Hoyles method. I think HYMC is looking next week like it wants to go back to the $2 range. And AMC looks like it wants to try to finally break out of this year-long descending wedge on a true reversal and try to get us back into the $20 range. And I'm super excited. I hope I'm right. If I'm not right, guess what? I didn't lose my money because I bought the dip and I hold shares. I didn't buy call options and lose my premiums no matter what. That's the beauty of it. We can plan our dip buys using the Hoyles method by playing off of the corruption of the market makers that they still don't understand we have figured out. This week, we knew this big spike right here. I immediately got on. I tweeted, don't fall for the trap, the pump trap from Citadel to get you into weekly calls. And this is why, right here. David C. Wilson's tweet, his Stock Twits post, perfectly explained it. Love it. Can't wait to try to engage with this guy at some point in time. Like I said, I'm going to try to pop him on LinkedIn or Twitter and see if he responds. So anyways, man, you guys have a great day. Have a freaking awesome weekend. I love this week. I love the energy. We literally, man, I hope Keenan Grace saw how hard we bought the fucking dip, man. That's what he always pushes. I think he would be proud of that. Go to the movies, you guys. I saw Doctor Strange once in IMAX, and I went back to watch it in 3D. And I'll tell you, it is a movie that was made to be watched in IMAX 3D. It was so cool seeing the quality of the 3D come out on the screen with all the lighting effects that they had in the movie. It was worth it. It was totally worth it. Go see the other movies too. You know, just get it to the theater. Even if you swing by your theater on the way home and buy a bag of popcorn, or if you're going to go out to eat dinner and don't want to watch a movie and you have one of the cool AMCs with all the dinner and drinks and the McGuffins and all that, go on date night to AMC, man. We're the consumer and we're the investor. And as that, you have more power than you know. Just like I say, stay away from companies that Citadel holds long on their books, like Netflix and stuff. Don't fund Citadel. No options May, no options to November. Boycott Citadel longs and go to the movie. Buy the product. You guys have a phenomenal weekend, man. Honored that everybody has subbed to me so far and the likes and the chats. This has been an extremely fun channel for me. So you guys take care. Froggy Stonks out.